Deven Choksey is now joining us from Krchoksey Securities. Deven, hi, good morning. Thanks a lot for joining us. While the market's been resilient, Deven, one space which is clearly heading back towards its recent lows is IT. I mean, Wipro is already almost there, within 3% of that. Infosys within 6%, TCS within 5% of 52-week lows. What's your view on this sector? Because that's clearly something which has been keeping even the overall market gains in check.
Hi, Anush. Good morning. Well, I think our understanding on the subject is that on one side, the demand scenario remains, I think, extremely convincing and buoyant for most of the IT companies. I think they have not been short of receiving orders as far as I think the long-term contracts are concerned. In fact, I think likes of Infosys and TCS have been gathering some of the larger contracts, which has got the visibility of next 5 to 7 years as far as the execution is concerned. So I think they are already there. Some of the mid-tier and the smaller IT companies who are operating their niche environment, I think they are also getting the contracts in the tens of millions of dollars, I think, which is again giving a visibility of next few years. So from a perspective of looking at IT companies, I don't see too much of a problem as far as I think they getting near orders. And largely so because on one side, you are having the world passing through, I think, good amount of turbulence. On the other side, I think the businesses are basically requiring to adopt IT more as a service than as a capital expenditure. So from that perspective, I think our Indian companies are already well positioned, as I see it. The current challenge in the market is twofold, as I believe. One, of course, I think the cost because of the attrition in acquiring the talent, etc. The other part of the challenge that we are seeing in the market is that because of the financial markets challenge, I think most of the IT companies where some of the passive funds would have a higher amount of exposure, they are the ones I think who are offloading the portfolio, and as a result of it, I think the stock prices come down. So on one side, where the fundamentals remain, I think, absolutely intact. On the other side, the market technicals are possibly, I think, making this particular stock trade in a range, and that's where I see the opportunity. At the lower end of the range, when I think these stocks are available, if you as an investor or I think even a positional trader, you buy these stocks, probably I think in a year itself, I think you end up getting 15-20% kind of appreciation out of it. So this market remains, I think, largely traded market for at least some of the largely owned stocks in IT space. And that's where I think one could possibly put the rationale that why these stocks are falling in current times. Maybe I think you will soon see the buying happening at lower levels given the strength of the fundamentals.
Deven, hi, good morning. I wanted your thoughts on some of these other big movers, right? Something like in Indian hotels. UBS has come out with a report this morning where they've raised their earnings estimates for the company. At this 300 rupee price, how does the risk reward look for a stock like Indian Hotels?
Sonia, good morning. Well, I think while the demand scenario for the once again occupancy in the hotel rooms has remained absolutely very, very strong. And likes of Indian Hotels, Bazaar, or for that matter ITC, they have, I think, reasonably premium properties available with them, where they are possibly seeing a higher amount of the offtake in this season. Largely also because of the fact that soon, the next quarter, we will be entering into the marriage season. And I think next 2 quarters hereafter would possibly also be asking for that side of the demand coming in. As a result of which, the revenue and the profit scenario remains, I think, pretty strong as far as I think the current financial year is concerned. However, this particular sector remains largely capital-intensive sector, and here I think the asset-light model in some cases have started working. But largely, I think the amount of money which is being spent in maintaining the property, innovating the property, I think that demands good amount of cash, which probably I think like investors who probably always find that I think the companies are working on negative cash flows, and that could be one of the reasons for which I think these stocks move in a sequence. Suppose if now the sequence is that I think the working of the companies are looking stronger, so the stock prices will go up. And moment I think you are into the capex mode, again the prices will go soften. So yes, current scenario suggests that I think the stock prices should remain firm because I think the demand scenario as well as I think the profit picture is looking, I think, absolutely convincing for the current year.
Okay, all right. Hi, Deven. Morning. I want to ask you about ICICI Lombard. There was a Jefferies note that came in yesterday. They said that in the last 1 year, the stock has been a big underperformer. It's down, in the last 1 year. So, yeah, that's a stark underperformance, 19% underperformance. But they believe that risk reward is now favorable. 2 issues are plaguing the stock. One is the stake sale. Second factor is, the leadership. That's a CEO change in the next couple of years. But they believe both are likely to clear out. Do you think risk reward is now favorable with the stock underperforming for the last 1 year or so?
Yes, Nigel. Good morning. I would think so. I think most of the insurance companies have remained underperformer because in past, if you notice, I think how they behaved, probably I think they moved much faster compared to their fundamentals following them. And as a result of which, I think the stock prices had to get corrected. If not, I think a price correction, the time correction was required in this particular situation. ICICI Lombard in particular, if I see, I think probably one of the best company as far as I think their ability to design the new products concerned. And that is where probably I feel that I think they would have relatively larger reach to talk about. I think the two things which I obviously notice in most of the insurance companies, how soon and how fast I think they digitize their operations, which brings down the cost of producing the product and at the same time servicing those products and they go to the market as a first mover advantage. I think in all this category of checklist, I think if I look at ICICI Lombard would probably within the general insurance segment would remain, I think, among the best along with the Bajaj Alliance. So from this perspective, I would think that I think these are some of the companies which could possibly be looked at from buying. I think for 15-20% kind of appreciation in this kind of a stock, I think is distinctly possible going forward. I think when you look at these companies from the current year and the next year perspectives.
Okay, well, Deven, I just want your thoughts on what's happening with Ambuja and ACC. And let's just pull out the chart of Ambuja, for example, the last 3-month chart, way above the open of a price. I mean, there was a time when let's just pull out the chart. If there it is, 3 months, 20%. For long, of course, these stocks were trading at a discount to the peers, right? There's this wholesome discount, and now all of a sudden there's this Adani premium, right, on Ambuja and ACC. But at current level, do you buy them? What's your view on both Ambuja and ACC now?
Yeah, no, I think you call it Adani effect, I think, as far as Ambuja ICC is concerned. And definitely, I think the stock prices are quoting it premium. And as you rightly observed, I think in good many months and the years, I think the stock prices have remained underperformer for a long period of time. The important point, I think, which I would like to bring up for cement industry in general, and maybe I think for wholesale, now it is our Adani Group companies. I think there probably on one side, demand scenario is remaining extremely strong. So the companies which having the pan-India presence, for them, according to me, I think the second half would get reflected very well as far as their ability to sell is concerned. The second part which I see here is that I think if earlier quarters they were affected by the higher amount of cost and I think the input cost, probably in this quarter in the next year after, I think the costs are going to remain slightly benign, and as a result of which I think the margins are going to be protected. A case in favor of Adani Group, I think, as far as I think the cement business is concerned, which is largely logistic oriented, they have a fantastic connectivity through ports, I think, which they operate their cargoes. And as a result of which, I think the shipment of cement, which Ambuja has always been demonstrating well, I think would possibly be seen, I think, much more effective. And as a result, with the logistic cost would be under control. Should you control logistic cost, and I think you have a stronger demand scenario, the equation works in your favor. Of course, I'm not at this point of time, I think, giving the discussion on the merits of the premium that the stocks are commanding. But I would generally believe that I think along with Ultratech, along with I think Shri Cement, this Adani Group stocks, I think they remain relatively more stronger from the investment perspective.